Good morning, friends. Samir Gupta, your host here, back with a new discussion of topic of discussion. Let us today kind of understand the concept of insurance, how it works, and why we should not make a claim. Also, not every claim that uh, how can we ensure that we don't make every claim and then make good for everybody. Uh, the idea how insurance started is something very, very unique and something very different that we have not discussed till now. Let's go back into history and understand how insurance started in the first place. So, probably if you look at some 500 years ago, the only route of mode of transport for anything to be transported was the sea route. People used to travel on sea and from country to country for business, and that was the only mode of transport from boat and ships. Now we also know that those days the only kind of unethical practice, illegal practice, or let's say the uh, survival of the fittest that we always talk about was that the same sea route had also pirates, dacoits, bandits, or people who loot on the sea are called pirates. So many a times these ships, when they were kind of transporting goods from one country to another country, the pirates used to loot them, and this has become a very big nuisance for the ship owners and for the businessmen. Now, why ship owners? Because the ship used to get because of uh, the fire, because these pirates used to loot the ships and set them on fire. So that's one of the reasons the ship owners are using ships, and the business owners who had given these ship owners the goods to be transported were losing their goods. So the ship owners came together, all put together, and came with a common consensus that let's charge a little extra beyond the normal pricing for the businessmen to ensure that we pool this money together and create a fund wherein whichever ship gets looted or gets damaged, this fund will make good that losses. And this was the basic beginning of how insurance started. Uh, Over a period of time, probably if you see in last 500 years, there's been so great changes. Uh, Probably everything is changed, evolved over a period of time, and today, whatever we see, the new age insurance companies in our age today are all backed with a lot of data, statistics, and technology to give us insurance at the fingertips. But there are those days when large number of people coming together with a common risk to pay a small premium was how the insurance evolved. And today we have at least not less than 500 insurance companies across the globe selling insurance, and there are about 50 reinsurance companies also who are insuring these insurance companies. So there is a lot of security in all aspects of the insurance business. Now, coming to this aspect of insurance, insurance companies charge a premium to the insured uh, to create a fund, as per their capacity, and set off losses, financial losses, if any, from time to time. Now, every company, as I told you, out of the 500 companies have their own risk appetite. Those companies which don't have a risk appetite and they want to insure more and more people and more and more insurance, they do the reinsurance with the reinsurance companies. Now, something beyond capacity can be reinsured with the reinsurance companies. So, insurance companies pay a premium to the reinsurance companies to insure risk beyond their capacities. This is how reinsurance companies also work, and this is how insurance companies work. Now, whether it is insurance company or reinsurance company, the claims are paid from the fund created, and then this fund is created. When they charge the premium to you, they invest that money as per the particular government, whatever the country they are in, as per the government's mandate. And these people, either they do it in government securities, government approved securities, and government approved investment funds like bonds, fixed deposits, debts, and other things. The claims are paid from this particular fund whenever the claim arises. It's paid from this fund, and if there's no claims, the fund keeps growing over a period of time. Now, the insurance company themselves are risk managers. They don't call themselves owners. They are risk managers, and these risk managers work towards keeping the company alive. Uh, Insurance companies were designed to take care of the economic slowdown. If businessmen lose money and they don't get that money back from some source, then they're bound to go into losses and shut down their businesses. And then, if that happens, that particular country will have economic slowdown. To ensure that economic slowdown does not happen, insurance companies have been designed and devised. Now, no insurance company wants to make profit, but at the same time, they don't want to make losses. So, the prudent way of investing and taking care of the risk is what they do, and that is why they're called insurance managers. They don't they don't look at profits. They don't look at how to make profits. They only look at how to keep the company afloat over a period of time. Most companies that you see in India today, out of these 26 companies that are there, general insurance and 28 life insurance companies that are there in this country today, almost have an history of more than 100 to 300 years. Some companies are 100 years old, and many companies are more than 300 years old in the across the globe. So the job is to just keep the uh, company alive. Now coming to the point that why why should we not claim every claim? Uh, when we do investment in insurance, instead of buying insurance, when we do investment in insurance, the investment that we have done in insurance as a premium that we have paid is there in that company invested to make sure someone who is in need gets that money and in the most consequential situation. And if we start making small claims every time, uh, the challenge is the fund will keep on decreasing and diminishing. And if the fund keeps decreasing and diminishing, the company would increase the premium to make sure the company is alive and afloat. So now here, what we have done is just because let's suppose we have a 10 lakh insurance and we have made a claim of 1 lakh rupees, it's 10%, which makes a lot of sense to have that claim. But at the same time, if my claim is let's say 10,000, 20,000 rupees, and still go ahead and make a claim, two things happen. One, the company fund that has been created as an investment fund that keeps diminishing, and because of that, the premiums will keep increasing every year. That is one reason. Second reason is that if I do a claim of let's say 2%, 1%, 3%, whatever that bill is, let's say if I had a fever and I've gone admitted for a 10 lakh policy, I also have a 10 lakh bonus accrued in the policy. But if I make a claim of 25,000, 30,000, 40,000, 50,000 rupees, maybe 10,000 rupees, the bonus is set off against the against the claim. So I lose. I tend to lose almost 10 lakh rupees just because I've made a claim of 10,000, 15,000, 20,000 rupees, and at the same time the fund of the company keeps diminishing, which makes gives rise to increasing premium next year. Not only for me but everybody else also. So, from our side, we generally say if you can afford to manage the losses that are there in every claim, maybe a small amount of 15, 20,000 rupees, don't look at claiming every claim. See to it that if you can avoid that claim, then please avoid that claim so that for sure we can have a healthy insurance. When I say insurance is a game of large numbers, more and more people getting insured is good for the country and the company. At the same time, if less and less people make claims, it's good for everybody, all inclusive, the company, the country, the insured, and the industry as such. Just imagine last 2 years, we have seen the worst of our times, that the pandemic that we have seen. And the companies that have made claims is to the tune of almost 50,000 crores, all put together. And this 50,000 crores is now being again taken back by the companies by increasing the premium, and government is allowed to do that. It's a mandate that the government has given to increase the premium. Some companies have increased by 10%, and many companies have increased by 30% of the premium. So supposing you are paying 10,000 rupees premium this year, you are paying 13,000 premium. Someone who is paying 40,000 premium has paid 50,000 rupees premium. So remember that every claim that we make has an effect on our premium next year. If we can avoid small claims which probably do not affect us or our financial health, we should avoid those claims and make sure that companies in the long run keep premiums intact and don't increase the premium every now and then. And if some company does really make a profit, then that profit will ensure that the company will decrease its premium over a period because government does not allow any company to make profit and keep the profit. That is one mandate by government of any and every country, that if there is a profit in the insurance company can set off that profit and give it back to its account holders. We call them insurance holders, by reduction in the premium or by increase in the returns. In our case, because we are talking about health insurance, the insurance company tends to decrease the premium to set off the profits and ensure that the company is still running healthy. So, my friends, please feel free to call me if you have any doubts, you want more discussion on this topic. My number is 9886100026. And don't forget, I again repeat, don't forget to like, share, and subscribe to our channel. It will help us and to do more and more and bring but new and more topics and share this information with you. Uh, until next time, have a good day. Take care. Goodbye.